Audio test. Test 1, 2. Audio test 1, 2. Hey, good morning, everyone. All right. All right. Testing on one thing. We'll get started. All right. Okay. Let's get started, guys. Welcome to today's live stream for July the 14th of 2026. Is my Tradecopia connected? I think so. Looks like it is. Okay. Let's do a quick litmus test here. Bye. Perfect. All right, a copy. Gave $2 to the market there. Yeah, I saw what happened to Alpha Futures. So they are a prop firm none of you should use anymore. They've basically rug pulled everyone. Thank God I didn't use Alpha Futures. So hopefully none of you got screwed over on Alpha. Hey, Kevin. Okay, this is where we're at, guys. Let's quickly look at the daily, 4 hour, the 1 hour, the 5 minute, see what's happening. Okay. Top. I'm streaming the right. Okay, you guys can see my top right here. Okay, top right, daily. We got this fair value gap here. Technically, this fair value gap should be going all the way to down here. It depends if you have set on or off. See, that's the tricky part about this. ICT had it off, but when we're looking at the daily, and let me pull this up a bit more so we can see it better. The daily fair value gap here, we broke below it, and now we're trading into it. And I'd want to see this kind of use it as confluence to push price lower, right? We had like a swing here, and then hopefully we push up, and then we continue pushing into this rate here. The things I'm looking out for, and you'll see this on the daily, is I'm going to be looking at this quadrant here, trading into it today, like this wick. And then I'm also going to be grading this right here. Okay. But the two things that I'll be grading for trades, it'll be this and this. Okay. 4 hour. So it's just an aggressive sweep here, push to the upside. We grab that sell side. Did we grab the sell side? No, we didn't. Relative equal highs on the 4-hour. We push below that daily. That's that blue bar is that daily fair value gap there. And I want to see price kind of, pushing. It's either going to go higher or lower, but we're going to be using that fair value gap there to add it to confluence for future trades. 1 hour, again, just interim here. Midnight was here for yesterday, for Monday. Broke high, went lower. Today we pushed up higher after midnight. And now we're kind of sitting in this fair value gap here, okay? So all I'm looking at from a daily perspective is seeing if we are using this fair value gap to drive lower. Maybe it's a mean threshold of this wick, okay? Looking at the 15-minute, this right here is what? That was Thursday's RTH gap. I was just using it for previous day on how we were filling lower. Now that we filled it, I think I'm going to remove it off my charts for today. Because what we want to do is we want to use the RTH gap from the last 3 days. Let's look at the RTH gap for the last 3 days here. So you can see this is yesterday's RTH gap. This green bar right here. Friday closed here. Monday open there. No fill at all, right? So this is going to fill in the future. The question is when. So we're going to mark this on our chart. It's very important. Even do something like, we can do this. And then maybe we can do something like this. Unfilled above Monday RTH. Okay. That's going to be our RTH gap for Mondays. And then this one's for Thursday, which we filled in yesterday. If we go back to electronic trading hours, this is what it looks like. Everything above this line wasn't filled, and there's a true gap during regular trading hours. Okay. So just something that we're going to be looking at in the future. But from a session perspective, the 15-minute here, we had some liquidity here. I called it out. I tried to capture some moves. Unfortunately, I could have caught in some. If I just held my initial position, I would have caught this, but it would have been all day held. It's very difficult to do. But we grabbed this liquidity here. So let me remove this I. We create a lower low, shift the market structure to the upside, and now we're consolidating over the last, wow, through all of London, we're just consolidating sideways. Okay. What's below us? Here's that wick there. It's graded here on the 1 hour. We can also grade it here on the 15-minute, if that might help you. But we're just going to grade it actually on the 1 minute instead. But you can see here, price is going to be going into this daily fair value gap. And we'll see how it respects the upside. Technically, what ICT said was basically hit that set button until you get the largest fair value gap. And then you create it. And this is where I am a bit troubled right now, because ICT on his latest stream yesterday, he used his top one. He never clicked on set and used the larger fair value gap that for him. But regardless, the story's the same. We just broke below it, came to mean threshold, broke above. So technically, I'm going to be using this fair value gap here. We'll use daily settlements because couple years ago, he said that's what we should do. So I will not break protocol. I'm assuming ICT made a mistake on yesterday's video, but your discretion if you want to use the daily fair value gap with daily settlement on or off. I'm going to be using it with off and using the larger fair value gap here. Okay. All right, and the 5 minute again is consolidation sideways from a 5 minute perspective. If you were to draw some kind of liquidity, like we do have some above us right here, right? Relative equal highs. Below us, we have relative equal lows. And we're between these two levels here. The question is like, what are we going to do? Are we going to bounce to the upside, grab some liquidity, maybe go back to the downside, or vice versa? So it gets a bit tricky because London was just moving sideways. Why? It's CPI. It's CPI today. At 8:30, we're going to be trading through CPI. And we will have to see what happens then. But those are the higher time frames. So again, it's a bit tricky with that daily settlement fair value gap, depending on how you want to draw it. And it definitely changes your outlook. But anyways, I am a 1 minute trader. So regardless, I should be able to find a high probability position, regardless if that fair value gap is larger or shorter on the daily perspective. Hopefully that makes sense. And yeah, we'll see what we get here. So let's draw our liquidity here. That is sell side liquidity. Here we got buy side. Buy side liquidity. Technically, like we even have like minor buy side right here. And this is going to be minor buy side. And then these yellow lines here are just London highs and lows. That's all it is. And I have London highs and lows marked at starting at 1 o'clock all the way to 5 o'clock or 6 o'clock. So 1 o'clock is my time frame. What we can also flag here is let's do the first fair value gap after midnight. It's one that has to be displacing, right? So this right here is not a displacement. This right here is decent. And I like how the candles here to the upside. Give me one sec, guys. This fair value gap here from is okay. It technically did displace a bit here, but like true displacement might actually be this one here, or even like this one. When it comes to first presentation after midnight, there's a couple that you can use. I think this is the correct one, but it would have been nicer if it displaced below these lows. I would have confirmed it. But this one here would be one that was displacing these lows right here. Okay. So I'll have both of these marked if we get down here. Two possibilities. And let's see what else we can mark up for our charts today. Daily fair value gap a bit cleaner here. So relative equal lows. Let me see what yes here did it also leave relative equal lows. It did the exact same. It drove lower than higher and gave that shift in market structure to the upside. We have Tuesday's first presentation fair value gap. I'm going to delete this one. This is a fair value gap that I used all the way since last week. What ICT says, his teachings is over the last 5 days. This is 6 days old, so we can definitely remove this. It's just a bit more noise that we don't need. And where is the first presentation after 6 o'clock? To be honest, I'm not so crazy about it. Why? It's because we're in consolidation. So it would be technically right here. But you can see here, we tapped it, we broke through it, bodies are here staying. So you know what? Nothing too crazy. So I'm not going to be marking that 6 a.m. first presentation fair value gap just because of this consolidation that we're in for the last little while. Anywho, do you guys have a bias for today? I'm curious. What are you guys thinking? For me, it's not as strong. But again, I want to see is how we interact with that daily fair value gap that I talked about. What I'm going to do now is I'm actually going to take off daily settlement. I'm going to map fair value gap for the 1 minute and see how it reacts. All right, so this is the daily fair value gap here. So it respected the highs and the lows here. It broke above. It used mean threshold. Low respected. Mean threshold somewhat respected here. Once it broke higher, it did push higher. Mean threshold respected here. So I think what I'm going to do is I'm going to use the settlement on just because I like how it's just using that lower half of that fair value gap, even though ICT is something else. If I use the other one, this is going to be the larger one. It's also respecting this area in some ways. But anyways, let's keep it like this. Yeah, it's hard to say today, Rick. I agree. It's just because I think it's CPI, to be honest. High impact news at 8:30 in an hour and a half. So we basically have probably one small opportunity somewhere to grab a trade if possible. If not, we'll have to wait for 8:30 to drop and then we'll be grabbing something after. I feel good today. Okay. But again, right now it's consolidation, guys. There's nothing that the market is giving us right now. Absolutely nothing. Range plays. We're in a macro too right now. We kind of push lower. Like 7 o'clock fair value gap is right here. Like that's like first presentation after 7 o'clock. Am I in love with this? Am I going to be taking a trade off of this? No. Why? Because we've just been moving sideways for hours. Clean move up here. Look at this. Like imagine trading London and getting these kind of moves. This you don't see in London, or sorry, in like New York. Moves like that very rarely. I feel like New York traders definitely have an edge, or sorry, London traders have an edge. Like the London session. A bit choppy, but then it runs smooth after 4 o'clock. Nice move higher. Yeah. Same with Asia here. Sideways for the last 5 hours, Kevin. Yeah. Yep. Tight range. Yeah. Once this breaks, it's gonna like so. if we think about the three cycles of price, there's consolidation, manipulation, and distribution. This right here is consider consolidation. I don't know why my speech is impaired, but it might reverse one way. That's a manipulation. It might pop, or it just might just drop like a rock, or go up the other way. Relative equal highs left on that 4 hour, as we saw. RTH not filled from yesterday. Technically, in theory, I kind of want to see the RTH gap fill. I realized over the years that like those things need to fill during RTH hours. Not like right now, but like during RTH hours. And that's of interest. But at the same time, we broke below that daily fair value gap. Right now, we're trading back into it. But we'll see if we get any. Like, let's look at high probability fair value gaps. It would be this right here, right? Sitting on quadrant levels. Like, would that be considered a high? It would, based on ICT's teachings. It's sitting on the lower half or the very low of the quadrant of that daily fair value gap. So it looks something like this. Okay. Those are the, draw this correctly. Hold on. I'm just going to pin this from the daily chart. I'm doing that. Okay, that's better. So those are the quadrants that we are dealing with. What is this? Monday's first presentation. So this is yesterday's first presentation, fair value gap. Look how nicely you rejected price. It was definitely a wall, a barrier. See? So this is a level that we want to watch out for when trading, up or in a bullish fashion. But what I like doing is I always like putting these dates here. So when I'm looking back in time, I know exactly what day it created. And once it takes more than 5 days for this date to expire on my end, I just delete that fair value gap. Like 7-9 fair value gap, that's Thursday. So I can still leave this one here. Like it is going to be sensitive in my opinion, but after 5 days, I delete. Hey Martin, how's it going, man? All right, the boys, the regulars are here. 710, we're kind of right outside of that macro. Technically, what's tradable outside the macro? First couple of minutes as well. But the thesis is like you're assuming that we're going to break right now, this consolidation. It looks like it tried to do it once. What time was this at? 3 o'clock during a macro. It failed. It kind of broke below this high probability fair value gap, spiked above, broke again below it from a body perspective, spiked above, rejected, rejected, rejected. And right now we have a closure below. Is this going to be the sell side sweep? Maybe. But just based on how this is trading, I'm not taking any shorts off of this. I'm also not liking how like the bodies broke below it and back above it and that. And I really wish the body stayed within it. That would have gave me really clear indication that like once we break it, like that would be possibly, a short to take it to what? Maybe London lows. But again, it's not relatively equal. It's just a low from a specific time. So nothing to break. Martin, what are your thoughts for today in this 5-hour consolidation? Is it going to be doing this till CPI? Let me know your thoughts. But I was watching the three high at Wait, right here. Okay. There's fib level. OT entry short on the 3-minute, right? Are you seeing the 3-minute there on like the OT? I'm trying to find the OT entry, but on the 1-minute, it's going to be like the break of this low here. That's like the shift in structure, rejection of the upper quadrant. And then you'll be going to like a fair value gap that forms. And maybe this one right here, this inversion, or this one right here. I'm getting in right there with the stop loss. Okay. Yeah. I see it. Price. And that went till now. Oh, like this little fair value gap right here, expand it. Let's see. Maybe this one. Are you talking about this one right here? That was the first fair value gap. Technically, it's this one. Yeah, bounce. It was just 2 bounces, 1, 2. But anywho, like this is absolutely brutal. Like technically, if this candle here, it pushed up higher and it grabbed these highs, and then maybe off of that inversion would have been a short to these lows. But this is rough PA, guys. Like we're range trading. So if one side gets taken, to be honest, I think the highest probable trade right now is just assume we'll be in a range and tag the other side. But look at this high probability fair value gap here, rejected price. Price is now pushing to the upside. Model stick. ICT said not to trade today. I don't remember this message from him. I don't think I finished watching his YouTube video from Monday. I think I got halfway through on his like live executions at 9:30 on Monday. So we got CPI today. So CPI today. Yep. There's going to be a big injection of volatility. So we went into this right here. We pushed up higher. Was there any entry here? No, in my opinion. If price took these lows out and closed above here and had an inversion, maybe that would have been a decent trade. But this showed nothing. It left too much on the downside. And again, trading this consolidation, it has to give us more. But now we have like 1, 2, we have 3 lows now that are not protected on the downside. Here we have relative equal highs, price pushed to the upside. Oh, okay, yeah. I watched the first couple of minutes of that lecture, and I was happy that my initial bias was long, grabbing those relative equal highs and mean threshold of the RTH gap. So, but just price just pushed lower. So it's nice to see when your trade starts to align with ICTs and is in your overall bias. I think that's something that like all of you should strive for. Eventually, you'll see that happen more and more often as like the longer you trade, where you'll see like there's like a 50-50 chance of being right with ICT, because it's 50-50 at one point, and then it's like 60-40, and then 70, and then you eventually get to like 80-20, where you most of the time you're aligned with what he says, but sometimes he just throws like a curveball at you, and you're like, okay, I wasn't expecting that from you. But anyways, minor buy sides right above us. Just watching to see what candlesticks here do. Huge displacement here to the upside. It could never get there and consolidate. And there's also sell side below us as well. But right now, from a trade perspective, there's nothing here. Nada. 5 minute is also. I'm also watching that 20-day look back, and we are in a discount of 25%. 3-day look back equal is 90. Yeah. When did you start using the 20-day look back? I've never really used it in my life until like 3 days ago when it was mentioned. But it's a really good sense of where we're at. Probably looking at the 20-day look back right now. Let's see. So for everyone in the chat here, 20-day look back is you look at the last 20 days of price action, including today. You mark out the highs and the lows, and it tells you roughly where we are at in the range. And right now we're at a discount. And price usually tends to gravitate towards that mean threshold, right? From like an average perspective. Okay. 3-day look back are, now we're approaching mean threshold. See what yours, 29, 20. Okay, we have the exact same look back. Okay. Aligned minor buy side's gonna get, it looks like it's gonna get taken. It broke above mean threshold here. It didn't even lay a fair value gap on it. Do we have any fair value gaps on the mean threshold here? We got this one right here. So I'm gonna get really picky now with some of these. So remember, high probability fair value gaps. There's really, ICT talked about this in his Monday lecture. There's really 2 fair value gaps that are worth using. First presentation. So after 9:30, after the hour, after a liquidity sweep, first presentation of something. It's very strong. And number 2, it's sitting on a quadrant. And everything else, to be honest, you should ignore. That's how you filter out fair value gaps and just use the correct one. Like this one's sitting on a quadrant, right? This one right here. We can definitely delete it. This one's sitting on a quadrant as well. This one's sitting at mean threshold, which are my favorite. You can see here how a bit sloppy here, but mostly the bodies are staying within it, and then finally breaks above, uses mean threshold of this entire daily fair value gap and this fair value gap right here, which pushed it to the upside. Again, it's not a trade or anything or putting money behind it, but it's reading candlesticks here and seeing what you're gonna be doing. London highs almost tagged here. Wondering if there's a play here. Maybe more of a discretion play. Something that I learned, guys, is crazy. You know what you do here? This calculates your lot size for you, believe it or not, this indicator. And I learned it off like a short. I never knew this. So what you do is you go into your short position or long position. You put in your account size. So for example, 50,000. You put in your risk. So for example, I'm going to be trading $300, or let's call it $300 per account. So that means I have roughly, 7-ish trades, 7 to 8 trades per 50K account. You want your risk to be USD. And what it does, depending on where you put your stop loss, it's going to calculate your quantity. So for me to have $300 of risk here, I have to use 3.6 micros. Cool, eh? And it tells you the amount. So this trade's going to be $600 to the downside, and it's going to be $300 of risk to the upside, giving you 2-to-1. And depending on where this is, real time, it's a really quick calculator. Did anyone know about this? Because after so many years, this is like one of the first indicators I've used. I finally know how to use it properly. So it's crazy. But now I'm actually looking at these little small numbers here. So highly recommend, if you're not using like Top Step X and you're using Tradevate, this is the GOAT on how to do quick calculations and really adjust your contract size quickly to get into positions when like things are moving really quickly. But you can see here, guys, London highs not breached. Have they been breached here? I don't think so. And if they have, it's not a significant breach. It's not. Okay, so that's London highs there. London highs. Let's see what it wants to do here. If it's gonna explode past it, create an inversion, and just close quickly below it, that might be a possible range play where you're taking it from one side of the range to the other. And I'll be targeting these relative equal lows here that form at 3 o'clock. If this happens around like 750, even better. That's going to be like the macro. But we also have to know that we are trading, as Martin said, overall in discounts when it comes to the 3-day and the 20-day lookbacks. But we're also trading in the upper half of the daily fair value gap. So what does that mean? It's telling me slight weakness, right? Usually like what you want to see in these things is like you want to see it, stay in the lower half and then push lower. The moment you start seeing it push higher, it might be indicating price going up. There you go. London highs just taken. I don't know, if you guys are thinking that you missed out, to be honest, like the only thing here, and I'm going to label this as like a C trade, is you get in at the break above, goes below, and then your stop is like below mean threshold of this fair value gap. Like maybe like a 1-to-1 if you're really cutting it tight, something like this, 2-to-1. But I think something like this is just not feasible long term. So I don't see this as a mistrade at all. Prices heading into yesterday's first presentation fair value gap. Relative equal lows left before CPI. Interesting. I'm watching this level. And sometimes price is one of two things. It just goes higher and then it just drops lower, or it continues going higher and it uses this as rocket fuel. So you can see here, we did break above. Is this a suspension block on one side or not? Let's see, what is the close of here? 664. And what's the close here? 66450. And the open is 654. So it's not a suspension block. But anyways, possible move to the downside would be maybe something like this. If price were to quickly close below this and we're within the macro, I see that as a possible range play. But just looking at this consolidation, the breakout above it, it might continue going higher. So we just have to wait. 3-day look back. I'm going to draw a range so that I see it. I haven't back tested look back or like the 3-day look back. The 3-day look back that I have is like 7 points higher than you. So maybe that's correct. I have 689. Yeah, that's 690. Okay. 689. The 3-day look back is basically right here. This price right here. So let's see. Let's see what you want to do price here. When would this get validated, this IFEG? It has to close below it, okay? That's going to be the validation. If it doesn't validate, no bueno. You can definitely use that fair value gap and continue pushing higher. The first presentation and technically the consequence or the mean threshold of the 3-day look back. Let's look at what ES is doing. Look at ES. So crazy SMT. I just saw this now, but it actually took out all of the lows here and then it pushed higher. So there was SMT to the downside. And remember, when does SMT make sense? What ICT said is not every single SMT is worth looking at. It's only worth looking at when we're in macros, when we're in specific times of high volatility where price should move. He only looks, if he does use it, he just says it's a cherry on top kind of thing. It's not a qualifier. It's just that it makes the trade a bit better. It's something that he looks on from his end. So hold on. So this would be 5 micros. It drops below there. Never got to the high of the daily fair value gap there. $730. Model 6. I can definitely watch it. I just don't know if I'll be able to find it. Model 6. Is that in this Model 6? Is there like a playlist it's in? Is it in his like core concepts? I used to trade MMX, believe it or not, guys, 3 to 4 years ago. It was one of the first, and all I did was MMX. Original consolidation with a 2-stage delivery to the upside and then 2-stage to the downside. But it just naturally phased out. But maybe I have to in this playlist. Okay, Model 6. I wrote it as a to-do list on my end. Sticky note. Model 6 review. I'll have to look at that again. All right, so price here pushed above London highs. It's pushing back into this range here. Are we going to get a close? On the downside. So I have to pull that a bit lower. I'm going to see if we can get a body below here and then seeing if it's going to act as an IFEG. Okay, that's good, Martin. This might be a possibility. 3 to 1. Targeting sell side liquidity. Yes, already took it. It wasn't as clean as it is on NQ. Pushing into. Let's see if it's going to qualify this IFEG. Remember, this is the IFEG that broke liquidity to the upside, and technically it's one of the first fair value ups to the downside. So this is going to be like a range play if it does happen. 3 to 1 RR. I'm okay with that. It plays out. It plays out. Liquidity sweep, London highs taken, IFEG. Once it qualifies the IFEG, which it hasn't yet, never hit first presentation of yesterday. It would have been nice if it did. It almost did. There you go. There's that bounce. It never turned into an IFEG here, and it looks like it's going to be pushing higher. And we never hit, yeah, and we never hit this level right here, 690, which is the 3-day look back. I have to back test the 3-day look back, and I want to see how often we actually hit those levels. Have you done that, Martin? Have you back tested 3-day look back or 20-day look back? Sometimes I don't even back test things. ICT says something, and I just start using it right away. And I just start forward testing with real money. Because usually it works. It's not like it doesn't work. All right, so we've never qualified yet below it. We're pushing up for a second time here. A lot of people use like Claude these days to backtest stuff. Like I'm seeing all these videos on using like AI to backtest, and I'm like, is manual the better way because you actually do it all yourself, or is AI the way to speed through backtesting? But in my opinion, there's no shortcuts when it comes to trading. Like you got to put in the work and the hours. So right now, am I interested in? So this fair value gap here, it acted as a nice level of rejection. And now if it were to close below it, it would give me, I think, a bit more certainty that it might actually respect the downside because it already was utilized to the upside. And it's, it's sitting on a quadrant. It broke London. That was a very nice push lower here. I'm going to take the short right here. Technically, you should wait for the break, but I'm assuming it is going to break. Okay. Then we're going to buy 5 here. What is my stop here? 2. Uh-oh, did I mess this up now? So I'm risking a bit more than what I should have. I'm going to have my sell stop right above that. And right now, I'm just hoping in the next 15 seconds, that body closes below. It's very important. If that body closes within, I'm most likely screwed. Maybe I should have waited for that closure. But in 5 seconds, I'll find out if I am right or wrong. Okay, so it closed below. So I would have entered right now anyways. And this is going to be technically a 2.5, 2.6 to 1 here. Stop loss in an area where it should be invalidated. This is a range play here. Look out buy side, fair value gap. And now we want to see this act as, and we can always put buy limit down here. Technically, you know what? I'll aim here, but I'm going to probably scale out like 80% right there at like maybe mean threshold of like this high probability fair value gap if it gets there. So here's attempt to price close below IFEG from a body perspective. Okay. Now let's see it leave. Leave with speed and displacement. Free CPI trade, in my opinion. If you're in the positives, I think this is like a B trade. I wouldn't say it's an A plus, but the confluences are there for 2.6 to 1. So no hard feelings if this doesn't work out. I don't want to see bodies close in the upper half here of this IFEG. high probability fair value gap here sitting at the 0.5 range. If we break below this, I think there's a really high probability chance that we start going into the next level here. But let's see if price wants to just slice this. Okay. Okie dokie. What is this green line here that I have in ES? Random level. Delete it. Moving my stop loss below the upper wick of like, I got the fair value gap and I got this discount wick, which is balanced. I'm just putting my stop loss above there. So stop has been reduced by roughly, since the beginning, around maybe 30% here. So and price shouldn't get there. If it does, I'm probably wrong. It's also above the mean threshold of, or let's do this here. This is the bullish order. Yeah, so it's basically right above the mean threshold of this bearish order block here. We don't want the price getting that high. This has to break. Very important. I don't want, it can definitely bounce. If it does bounce, we are in jeopardy. Five minutes going into a 5-minute fair value gap right now. Again, this is where price should start slicing. Body's not even closing in the upper half of this fair value gap here. Come on, break that mean threshold there. I'm going to put my stop loss above mean threshold of this IV, or just above the IFEG now. So I'm at 50% risk. This is going to be a bearish order block here. So bearish order block. So we got a fair value gap right here that creates the downside. We've got this bearish order block here on the 1 minute. And then we got this IFEG. So if price does get up there, it's breaking like 3 to 4 PD arrays on the 1 minute. I wouldn't be interested. Macros in 10 minutes. We're almost there. Took it a bit early. But sometimes you just don't get the entry. But technically, if you're very patient, as per our rules, we should only trade a macro, but we're trading a bit before it. So I'm not so crazy about this fair value gap here just because it's not really sitting on anything. Is it sitting on a eighth? Maybe. But regardless, it's not sitting on a quadrant. But I'm looking at this bearish order block here. And once it breaks below here, I think going to, like, this is going to be your, like, my break even. Like, once I get a body closure here, I'm going to break even. So price before this push lower, you can see here bodies just haven't even gotten into it. Right now, we want to see this body close below mean threshold. Like, that's just like 1 minute order flow that we want to see, and just use this and just continue going lower. If all these bodies start closing in the upper half, possible bounce. Can I trail to break even? In my opinion, no. Maybe if you really want to reduce risk here, let's see. Thinking. I'm just going to keep it right here for now. You could possibly put your stop loss below or just above the mean threshold of this IFEG. But again, it can just go up wick you and then push lower. So question is, you know, taking your risk down to a quarter risk at that point, which is fairly almost break even, or leaving it at half. That's nice. Okay. So because we're starting to enter, I know my stop losses recently have been screwing me over by a couple of points. But at this point, I want to see order flow coming back up so high. You know what? I'll leave it right. 50% risk right now. So roughly $150 of risk on the table. And $850 if it hits target profit, assuming I do not limit out, which I will. So probably going to be a $700 trade if all goes well. Mean threshold of daily fair value gap is holding. I'm moving myself to a quarter risk here at this point, so $70-ish. Right above mean threshold of his IVG. At this point, I don't want to see price breaking this fair value gap that we respected the downside, this bearish order block that we respected. The moment it pops higher here, there's a higher probability that we start heading to these highs again and to the mean threshold of like the 3-day look back and all that fun stuff there. So give me the drop. Body's still staying within it. That's nice to see. Come on, daily mean threshold. Break. Once this breaks to the downside, probabilities go way up. Almost at break even here. Just has to just drop below this fair value gap here. Five-minute is pushing into a 5-minute fair value gap right now. 50 minutes looking okay for a reversal. It's just this point right. This is like the make it or break it, in my opinion, of the trade. All bodies are staying in the upper half of this high probability fair value gap here. Macros in 5 minutes. But see, at this point, really, it's an 8-to-1, right? Like of what I have on the table right now versus where it can possibly go. So I'll just leave it as is and let price do whatever it wants. It's already skewed heavily against me from an RR perspective, and NQ has to do its thing at this point. Body's still closing in the upper half here. It looks like it's trying to leave, but it's failing to do so. Tempted to break even on this. Shift in market structure right there, technically. So right now we're in a range. Okay, range play. Didn't have the speed that I was looking for. To be honest, I think this might be a good area to get out at break even. That rejection was no fun. And I'm out at quarter risk, roughly $100. That's a trade. Stop loss was right there. And unfortunately, price didn't break this level here. I am watching. How we're going to be using this IPG now. Again, I wouldn't be going in a short right now after this rejection here. Price is still staying in the upper half of the daily fair value gap. So these highs now are under attack. And it might be going into first presentation here. We have first presentation, and then we got these highs right here as well. CPI in 40 minutes. But overall, like the entry mechanism, I kind of liked a lot. All the confluence was there, and it allows you to drop your risk down significantly during the execution. So it's not like a solid -1. It's a 0.25 loss. So overall, I'm okay with that. Tilt level still at 0. I broke above this IFVG here to the upside. Is this fair value gap going to reclaim to the upside? It might trade down and then push up higher. Bodies here came down to mean threshold. We're in the macro right now. What a long look like from here. Yeah. Along here would be the assumption that price went down on the 5-minute perspective, went into a fair value gap, rejected mean threshold, and it's going to continue pushing higher, grabbing highs. But I just don't like that. The reason why is just because sell side here is below us. And that was my primary objective here to the downside. So if it wants to push higher, I'll let it do without me. Then maybe there might be something else. We also have these highs from above us from yesterday. So watching that as well there. But in terms of consolidation, where we're at in price, we are this tricky range to trade, guys. Easy to get hurt. Today I got scratched. I didn't get hurt. As long as Trump doesn't tweet anything, that's the most important thing. Yesterday he opened up the State of Hormuz, and he decided to take 20% tariff on everything going through it and banning Iran from using it. So again, another spike in the market yesterday. It was unfortunate. So you can see here, body's closing above this fair value gap right here to the upside. So it came down, mean threshold never broken, closed above. And I'm going to watch right now. Yeah. Man, Trump's just running it, man. He's running his mouth. Guys, once Trump goes out of office, I think trading's going to become easier. Just these little spike outs that we just have to just take the L's or the wins if you're lucky, if you're on the right side. But usually it's in the opposite direction. So tag those trades as Trump losses and just tally it up. And it's going to be a good party conversation later on. But right now, I think we're going to push higher. Sleepy Joe back. Exactly. You know what? Sleepy Joe was technically my opinion of presidency has changed. As long as they don't impact the markets too much, I don't give a shit who's president. Sleepy Joe definitely, created a nice PA over the last 4 years. So Trump is he's just creating. I think I read an article where he took like 15,000 trades or 1,500. He's like up 2 billion this year. And I'm like, this is ridiculous. Once he told everyone to go buy a Dell, and then Dell stock prices went up by 3x over the next 3 months because the United States had a contract with Dell. It's just crazy what's happening. It's like insider trading, but it's publicly made sometimes. I think the strategy is like whatever Trump says, just trade it. If he says to buy a stock, just buy it. I think the big one right now is going to be the Clarity Act. Guys, check this out while we wait. I want to make sure that sharing properly. This is the Bitcoin chart. Really weird algorithm that I mapped out myself. I mapped out the halvings as well. But this has been designed to have exactly 3 years of an uptrend, exactly 365 of down, 3 years of up, exactly 3 years of down. Sorry, 1 year of down, 3 years of up. Exactly. It's like 1,050 days. And right now we are in this downtrend. And believe it or not, when you actually look at these highs and lows, and let me look at NQ quickly, nothing's happening yet. If you look at these weekly highs, because it's like the weekly chart, the trend technically breaks once the first weekly high gets broken. So like right there. Same on like the last bearish move here. Right? That was like the first weekly swing that got broken. Technically, this was a swing, but it wasn't like a major swing. And then here to the downside, this is the swing now. This is for sure the swing. And now we're pushing lower. So that's my buy zone when it comes to crypto in general. Between 84% drop, 77, and I think the next one's going to be between 70 to 80. So I think Bitcoin's going to get to I think once it gets to 50K, I think that's like a really good buy opportunity for like the next 3-year run up. So for those that do trade crypto or buy or whatnot, really interesting. But anyways, back to NQ. This PA is so dog. I think we'll have to wait till right now we're in my favorite macro of the pre 930 session, which is 750 to 810 macro. And price has done nothing. It's been moved sideways. So right now I think it's just delaying for CPI. CPI is going to give us a massive spike to the upside, and then 10 minutes in there might be a possible trade. But I'm not so crazy about this fair value gap anymore. It's still considered like a high probability for it's sitting on a quadrant. It took out London highs. I would be shitting my pants if my stop loss was up here with this kind of price action. So. Just being honest, though, I'm really happy with my management here. Three minutes. All right. So JYMES is saying this is a breakout and he's going long. What's my opinion of that? I hope it plays out for you. I'll just tell you my concerns here. The reason why I'm not going long is this fair value gap here. We broke back down to the downside right now. We got all of this relative equal low below us. We took out all of these highs, like all buy side was taken. If I was doing something right now, gun to my head, I would go short. And to be honest, I might go short once we break this, the downside. Like if price does something like this, that might be my trade. But again, that's just my opinion. Like go with your bias. Like JYEMS, if you think long is done and it's a part of your strategy and everything, the breakout, then do it. But for me, it's just I have to put my hands down. The only position I saw was this one here. And even this one right here with us breaking back below this IFEG. I just don't like how we traded above it and below it. So I'm just waiting for a close below here and then seeing if I can maybe grab a position short. That's the only thing I'm looking at. We got CPI in 30 minutes too. So technically, we enter a no trade zone. After like, if you're not in a position, if you're not in a position by like 8 to 10, the last 10 minutes from 8:20 to 8:30, like you shouldn't trade it. It's just going to consolidate and it's just going to wait for that news to drop. And then it's going to give us some crazy manipulation or distribution. But if it's manipulation and maybe we can cash the swing to the other side. Again, I don't know, but we'll have to wait. Last couple of CPIs and PPIs have been pretty lacklustering. Like I saw the candle, I'm like, wait, was today's CPI? But it's TBD right now. My buys of long or short, it's exactly 50-50 right now. It's probably more on the short side than on the long side. But there's nothing tradable. And there's nothing now I'm going to put risk behind. 8 o'clock candle is going to kick in 5 seconds. We'll probably see a larger spike to one side. As like the 8 o'clock and 7 o'clock candles are usually a bit bigger than the rest of the candles. So do watch out for that. 8 o'clock has hit. Yes. Where's my timer? 8 o'clock has hit. I like that short that you just pointed out there. It feels like I'm just getting stopped out here. Yeah, it's like I'll tell you right now, it's like it's not a high probability trade. Going long from here, like CPI, but ask yourself this: like where, like what are you targeting for longs? Like these highs here? Okay, maybe like that might happen the next 10 minutes, but I'm just like there's nothing up here. Like it's all been taken. This is a 5-minute fair value gap here, guys. 5-minute FVG. Okay. I'm going to mark it like this, like a little small box here. But like that's where it is relative. So if we see like a break below all this and like a retest, this is going to be, it's really unfortunate to see something like that. My initial stop loss would have held nicely. But again, we're risk traders, risk managers. And that was a mental pullback, to be honest. It was a deep pullback too. It was a 0.75 pullback. So basically OT pullback. All right, now we're dropping. Of course we are, price. Of course we are. What would a short look like here? The short would be like, the stop loss would be there. The short would be there, 2 to 1, grabbing these lows right before CPI. Yeah. On to the next JYEMS, but just kind of ask yourself, like, that breakout, like what was the consensus or the target or like the buy side or sell side? Because to be honest, like there's nothing up here other than first presentation. This would have been a bit triggered that price did that, because I would have been handsomely right now moving to the downside. But let's see if price. So close below mean threshold. We've got this fair value gap here. 2 to 1. How many contracts? 6. Probably do 5. I'm just seeing how we're going to respect this area here. I'm not going short right now or anything. I'm just looking on this fair value gap here. We closed below mean threshold of daily. We grabbed this sell side to this sell side. So sell side sweep just happened. And it looks like price right now is pushing to the upside. So there was no continuation there. Maybe there will be. We'll see. 803 still in the macro. That was like an instant rebalance kind of. It kind of pushed up, closed this fair value gap with a wick. Discretionary trade here, guys. I'm going to go short with a very tight stop loss. Buy stop. Right above this wick here. Technically, it's like a 0.7 R, almost 0.6. Moving my stop loss below mean threshold of this wick here. I don't want to see that broken to the upside. I'm already moving my stop loss here. I'm watching this quadrant here. Once it hits this quadrant, I might just go to break even and just hope it just collapses. We're in the macro right now. We just broke below this 5-minute fair value gap. 1-minute fair value gap. Mean threshold of daily. A lot of confluence here. There you go. Hit that quadrant there. We're in range right now. Like it's where there's going to be a lot of, so it's just a game of just risk management at this point and trying to hold price and just getting it to break down through these levels. But I just like how we broke past like 5-minute fair value gap in this. Like, guys, open up the 5-minute chart and just look at that fair value gap there. Like that is kind of what's going to be holding my bias to the upside. So I've got 10 minutes left in this trade. 8:15. I better go to break even. Yeah, but right now risk is what? Risk is roughly, risk is 50%. I have 150 on the table right now, and I have $800 of possible target here. I'm going to do a little small partial just because price is a bit funky. We'll do buy 3 limit right here. Just above mean threshold of this high probability fair value gap. I wouldn't want to do it here just because like that's going to be like a 1.5 to 1. Like I want to like at least start partialing like around 2. And again, if it hits that, it should hit mean threshold at least. Come on, get past this quadrant here. Just push right through it. This fair value gap technically sitting on a quadrant. Nice rejection to the upside. So let's see how it's going to act. But again, like look how I'm pulling my, like I'm very specific about fair value gaps. And that's what kind of changed the profitability scale for me. Just picking the right ones. Like this one right here is of interest. Once you break below this one, to be honest, I'm probably going to move to break even. I just need to get a closer below it. And that's going to have to be my IFEG if it wants to push lower. So right now I'm a candle away from going to break even. A bit more, 15 seconds. There you go. Good boy. All right. Right now I'm at break even, right before a CPI. Do I want to see price going back into here? No, I don't. I just want to see collapse. Like we're in the macro, like it should drive. Buy 2 limit here. This is going to be terminus if it gets there. This, I want to see it being used as IFEG. There's a fair value gap here. There's a, like, where technically stop loss is above mean threshold of the second fair value gap here. So in my opinion, it's protected enough. IFEG, fair value gap 1, fair value gap 2. So there's 3 fair value gaps here. And I am not interested in having a stop loss up here just because we're in a range. So see if that holds. Stop loss right there. And that push I didn't like. Welcome to pre-CPI trading, everybody. This is the shit that you got. We closed above this fair value gap, above this quadrant here. We're leaving the macro in a minute. So again, there's nothing here for me to hold and assume it's going to push higher and then lower. That's nice. Let's see it close below this low here, and that's going to be our drive lower. Once it gets down here, I think my confidence goes up to like 70% that it hits and 30% that it reverts. Do you ever try the one-day pass accounts? So all I do is one-day pass accounts. On Funded Futures Family, they have 2 one-day. Right now, FundedNext, they came out with one-day funded accounts, daily payouts. So I'm definitely going to be using them next. If you guys want to, support me, you can use code DOM, but I don't do it on CPI or PPI. I just take regular trades. I don't risk it because there's no intraday trailing or anything like that. So I take regular 1 to 1.5 trades for one-day pass. And it's either I blow it and I just get another one, or it passes. That's how you do it. So do not like, if I were to be trading Apex, I would do like PPI and CPI days because of the intraday trail. But at this point, I just do like the daily drawdown on Apex. So I'll take it probably a bit slower. Like if I were to be doing like a 20 count thing, then I wouldn't even do a 20 count. I'll just do 5 accounts max. Because I've heard too many times that Apex just doesn't pay out people that have 20 accounts. So do 5 accounts, get a payout. Maybe upgrade to 10, see if you get a payout. If you don't, whatever, you're still on the upside. But do not do 20 accounts. and assuming you trade it well, you might not get a payout. But see this right here, guys? Like this is like there's a little fair value gap right here. I'm not crazy about it. I'm not going to draw it out, but it's just nice to see price. And there you go. There's a drive lower. Stop loss below this bullish order block here. Okay, so we've locked in $50 or whatever this is. This would have been such a nice trade. Ugh. But it's going in my journal. Again, like remember how I told you guys that my stop loss usually screws me up? Like that's my weakness. Like if you guys watch me, my biggest weakness, and I know this, is my stop losses. My bias is usually right. I'm really happy with my analysis of where I think price might go and specific turning points. But in terms of stop loss management, that is my Achilles heel. That's where things get a bit funky. So don't follow my stop losses. All right. Stop loss going just above the mean threshold of this bullish order block here. All right. Mean threshold of high probability fair value gap. You can maybe even like partial out 1 there if you guys want to be a bit like safe. Let's do this. Move chart. How do I show my execution mark? Okay. There's 1. There you go. So where do we take it? We took it at the high of this high probability fair value gap. There's a chance that it just might bounce. So at least we captured, I don't know, what was that, like $50? If it goes here, it's going to be like another 50. So that's 100. So that's 25% risk. And here we risk a bit less. We risk 70% of a usual trade, so like around 250. But we'll see here, guys. Oh yeah. Honestly, I think this is like the way to do with prop firms. 1 day pass accounts, FundedNext or my funded futures. And just wait for one high probability trade. Just take that 1 to 1.5. And then when you pass, trade it normally. Don't spend 2 weeks passing one account. That's wrong. That is bad. Oh, this should be 4 here. I really wish there was a better way of managing. And this is, ladies and gentlemen, this is CPI trading. Look what it did. It bounced off of just the high here. My next big partial is going, you know what, let's have it just above the mean threshold of, or right above the high of this candle here. Would you want to see price go all the way back up here and then lower? Technically, no, especially CPI is 16 minutes away. So at this point, it's take us out for profit or drive lower. And if it's somewhere in the middle, I'm closing the trade before CPI. I'm not holding it. So because of slippage. If you guys are enjoying the stream, feel free to drop a like and a sub. Today I feel dialed in. Like I'm like, some days I'm not dialed in. Today I'm dialed. You look at price and you're like, you're my BITCA. But we haven't made any serious money today. So, but again, just calling the right moves. That's always a win. If you guys haven't heard about Alpha, stop using Alpha, guys. They screwed over a lot of traders, like a lot. And those are prop firms that you do not want to be affiliated with or trade with or anything. So if you guys don't have Alpha accounts, after your next blow or payout, just drop them. Come on, price, give us some love here. Bodies here staying lower half of this specific fair value gap. See, I'm cherry picking them. Cherry picking this one. Do I care about this one so much? No. Do I care about this one so much? Technically, no. It was a displacement. It was nice. It was displacing away from. But be picky about your fair value gaps. Not all fair value gaps are legit. Pick the right fair value gaps, trade in the right time. Like, look at this, guys. Like, we traded in the macro here, and look at that. Here, we trade outside the macro, and we got screwed over. Look when this push happened. It started at the macro. So we technically broke some rules. I just saw a good entry there. It was just a stupid pullback, but so be it. There's always a million trades that you can take every single day. So FOMO shouldn't be. Anyways, we are what? 14 minutes away from CPI. Here's my prediction. I don't think we're going to grab these lows before CPI. I think CPI is going to murder them to the downside. But we'll see. I hope it gets taken. Something like this, where it leaves, comes back, leaves, come back, no good. Very high chance that I'm going to get stopped out here right now. I'm anticipating the stop out actually for my $50 or whatever it is going to be. Like once you see price leave, you don't want to see it come back like that, especially above the upper half. So I am going to, I'm even down to main closes, but I'll leave it. I'm not going to, imagine I close it right now and it just drops. Martin thinks it's going to be a candle from both ends. Yeah, possibly. But I think it's going to drive down first. Unless, no, it might drive up. I don't know. Yeah, we'll see. We'll see in 13 minutes. Probably going to grab a quick snack or something right after this trade closes before. All right, ICT just posted a video right now. I'm going to quickly just scan through it without volume. Oh, 15 minutes. All right, so a couple of notes here, and I'm out. So ICT is using non-settlement price for the fair value gap on the daily. Let's see what else is here. Just looking at his markups here. Okay. I don't know. I will have to review that later. Hindsight speaking, kind of stupid of me for not just taking low-hanging fruit here and closing the entire position off and trying to grab these lows before CPI. It just makes a lot more sense once the move turns around, right? Where say, oh, I should have taken all of my profits here instead of just 20% of them. So, but anyways, I'm basically at break even for the day. So my quarter risk has been mitigated here. And now we're going to wait for CPI. To be honest with you guys, talking out loud about everything I'm thinking with you guys, believe it or not, it filters out a lot of garbage trades. I definitely trade more aggressive offline, and my bigger swings are all offline, but on stream, I'm very safe and conservative. And believe it or not, like my strike rate's a lot higher. So, thanks guys for forcing me to stick by rules. Exactly. It is nerve-wracking sometimes. Sometimes I dread it. I'm like, well, what if I'm wrong on stream? But anyways, this is how I trade. This is what pays the bills. So, and I always wonder, I'm like, how does this affect me psychologically? Just sharing everything I'm doing real time. Like I remember last week, Martin was calling like highs. And I'm like, let me just take this 2-to-1. Like I'm not going to pull it to a 4-to-1. And it goes to that 4-to-1. And I'm wondering like if I was off stream, would I have held it for like that maximum TP target? So just all these thoughts that are going through my head. All right. Did anyone catch a bit of this here? I'm curious. Or did anyone close their entire position right here? I would be amazed by you guys. To be honest, again, mistake from my end, trade management issue, but the majority of profits should have been taken out right there with one runner. Just because look how it was respected in the past. And silly me, I thought we're going to get to mean threshold. But I was wrong by how many points here? By 4. So those 4 points could have been an extra like an extra $150, $200 there, but so be it. Do you see here how like, so guys, look at this PA here. Very important. Nice rejection. We push away. And then right when we close above, if you guys are in longs, like this is danger zone. Like this is like all like the chance of it dropping from here is like 20% versus it going up. So when you see something like this, where high probability fair value, it starts doing like it leaves and then it comes back to the upper half, most likely you're screwed. That's when I said here, I might manual close, but I'm just going to leave my stop loss here because I'm probably getting stopped out. So try to read this 1 minute PA here when it comes to these like intraday swings. $100 for gambling risk free. Nice. Just match. Just don't get slipped for 400. Look at that. This high probability fair value gap breaking to the upside. What's CPI going to do, guys? It looks like, again, like these lows look brutal here. I'm really liking the lows. Anyways, I am going to really curious what ICT is saying here, guys. Martin, can you quickly just review the video that he just dropped and just tell us what he's thinking. But to be honest, guys, sometimes when ICT says something, sometimes it screwed me over in the past. And sometimes it's best to turn off X and just trade your own thoughts. Sometimes he's like, I'm looking at this level, and right away you just anchor everything to shorts, even though it's going to be shorts in 3 hours from now. He just anchors your thoughts to one specific direction. So all in all, I think he said he has no idea what CPI and PPI are going to do. I think no one does. Same with NFP. It's just complete luck and random. We'll have to wait here 7 minutes here. I can do quickly. Probably on my next payout, I'm going to be expanding to FundedNext. And I'll show you guys exactly what plan I'll be looking at. Futures. Get started. Okay. So let me share my screen here. How much time? 5 minutes to talk about what's the best possible prop for him before CPI kicks in. Where is that? Window capture. Okay. Done. Okay. This is what they came out with. Rapid 1 day pass. This legacies are 2 day passes, and flexes are 2 day passes. So rapid is currently what people are looking at right now. There's 100K, 50K, and 25K. In my opinion, don't even look at the 100K. 50K, it's 50% off. If you guys use the code DOM, you'll get that 50% off. But this is what you guys have to do. It's a one trade. 3,000 with the max lot. So it's a 1 to 1.5, which is very easy. Like all of our trades today technically would have passed this. Daily loss limit, which is none. I think if you add a daily loss limit, you get this price down to 109. I'm pretty sure. Consistency, none. Reset fee, to be honest, it's not even worth resetting. Just close the account and buy another one. Contract limit, 4 minis, more than enough. Okay, and then funded, 3 days. I thought it was same day payouts. Am I going crazy? Get a reward in 3 days. Maximum loss 2,000, no daily loss, consistency rule 40%, which is fine on a funded. Maximum withdrawal 1.2K. But I think after 3 days, you can start doing the maximum withdrawals of 1.2K. Again, like the only downside of this is it's 1.2K, which is very little if you're just trading one account. But if you have multiple, it's fine. And then again, if you guys can pull out 1K every single day with a reward share of 90%, which is great, I think this is like a great plan. And then if you look at the 25K plan, it's technically half the price. Same RR value, 1 to 1.5 to pass it. So here's my recommendation. If you guys are somewhat consistent on payouts, how much time do we have? We have 4 minutes CPI. If you guys are somewhat consistent to payouts, I recommend the 50K. I'm going to be going for the 50K. I think it's going to be 109. But to be honest, if you guys are still struggling and you guys want to trade and feel one live account, oh, look at this. I found it. Daily payouts, guys. Right here. I will recommend the 20. It's the cheapest entry to get in at $80. It's half of the 50K. And to be honest, a daily loss of 500 is more than enough. You can get a maximum withdrawal of 800. So to be honest, it's great stats. In my opinion, I recommend the 25. It's just, it might take a bit longer, but the most important thing is downside risk, which is your own credit card or bank account. That's FundedNext. That's going to be my next purchase. But anyways, going back to NQ here. I haven't tried lending prop firm. No, no one I know trades that prop firm to Grounded Cove. I only stick to 2 prop firms right now. It's just right now is just one. It's Funded Futures Family, and I'm expanding to FundedNext. These random, how much is Flex with off? It's going to be 50% off. So Flex is going to, how much is Flex off? You'll have to double check. I closed the window from my end. But the code DOM should give you maximum discounts on everything. But in terms of like prop firms, like Apex, I'd be careful about. Like, I wouldn't buy it unless like you're already with like FundedNext, Lucid, Family Futures, and you want to buy 5 more, do with Apex. And worst case scenario is they don't pay you out and you say whatever to that. But what's it called? The one that just got banned, or the one that just pulled payouts, Alpha, do not use. Top Step, they're reputable. You can definitely use them as well. So just stick to like those 5. Like there's no reason to look outside. Usually 6:45 to like 8:15. Today we'll stream a bit longer just because of CPI. Sorry about that. My attention got split there. It's every morning pre-session, pre 9:30. It's just the cleanest, easiest, slowest trades that we can trade. That's where the majority of my profits come from, and that's why I trade live. I think there's some good traders trading like the 9:30 open and whatnot and afternoon sessions, but that's kind of what we stick to. Anyways, these highs here from yesterday. Jeez. You know, but nicer if price took out this low first and then it exploded higher. Why didn't you do that, price? All right, insane. Okay. So remember what I talked about right before the stream, that there's like this like unfilled RTH gap. Like right now we're kind of going into it. We're not technically filling it because we're not in regular trading hours yet, but that's what it's pushing into right now. Yep, you're right, Martin. We just hit it. I'm watching it right now on like a second screen. This is it right now. This box, that's yesterday's RTH gap. This right here. Okay. Have it marked. I'm not going to have it marked here, but we just hit mean threshold. In terms of taking a trade right now, like there's nothing we have to wait. We have to wait, and I have to figure out what price wants to do here. But look what price did, guys. It consolidated for 5 hours. And look at that range play from the highs to the lows. Unfortunately, it just didn't really work out for us today. No max profits hit. And then a distribution. The daily looks really ugly at this point for like a bearish move. We'll give it 10 minutes. If I don't see anything clear, then we'll close off the stream. But we gotta wait here, guys. Chart is blocked. Oh, sorry, guys. There you go. Sorry about that. That should be better. So anyways, price went up to Monday's RTH gap. It broke above it. Here's Monday's first presentation from 7-6. Yeah, it looks like it closed in like the 20-day gap. Price is going right now into like an old suspension block from like a month ago on the daily. What a candle. Nothing on the 15-second, guys. Oh my God. I got a bunch of buy side. We're trending up. What is the RTH going to look like today? So the way I'm going to do it is I'm going to move to RTH. Yesterday we closed here at what price? 29,454. 29,454 is down here. So we're going to have a 450 point gap to the upside on the open. Okay. So think about this, guys. Gap to the open, relative equal lows here. Mean threshold is going to be somewhere here. So I don't know. I think I'm leaning shorts at the open or around there in the morning session. But you guys have to create some kind of like premise or bias. So here, let me show you guys a cleaner chart. All right, we're going to be going into the 5-minute here, okay? Okay. Can everybody see it? Let's see. Okay, I am sharing. Okay, there you go. So these are all the highs that we created yesterday, okay? This green box is the RTH gap. We just hit mean threshold of it, which is interesting. Technically, it's not really filled because it's not a regular trading hours, but we filled it. We have some new week opening gaps above us, which price is pushing towards. And at this point, this is what market structure is telling us. Buy side taken. All of these relative equal lows. Yesterday's price closed right here at 414. Somewhere around this level, guys. And this is going to be most likely the new RTH gap. So what I'm going to be looking for the open, or I'm just interested in, I'm just really interested in this level right here, to be honest. Like this stands out like a sore thumb. Consolidation. Maybe this was the manipulation to the upside, right? But this is sketch. We also have highs above us. Okay, we have relative equal highs. We have an unfilled RTH gap up here. I mean, new week opening gap perspective, sorry. But that is something that kind of sticks out to me like a sore thumb. And that's kind of where my eyes go to. Again, will it go there? Maybe. You're looking for like a confluence. Where's price turning around? What is it going to do? Like we did for all of our trades today. Like we're just waiting for an edge to appear in a direction versus the other. Like here is CPI hit, right? Is there a possible short here? There's no IFEG. Let's see on the 15-second here. Nothing. See, if there was some like IFEG to the upside with like an inversion, maybe you could have taken that to the downside and just start targeting all this. But there's nothing here. These are relatively smooth highs here on the 15-second, right? See how it kind of like we slowly went lower? I wouldn't be shorting that. There's nothing clear from a displacement perspective. Maybe this right here, but not of interest after a candle like that. Candle, this level right here as well, this is news low, okay? This is going to be a good draw in the future as well. Chris caught the short of 850. So you're short as of 850? Is that what you mean, Chris? Insane. IC called. Let's see here. Freaking asshole. Freaking ICT, man. Here he said, enjoy your Tuesday, folks. Part 2. So he did call it beforehand. Yeah, he's a crazy old man. That's what he is. Crazy old grandpa. Oh my gosh, that's insane. Okay. Anyways, news lows right there. Or here would be mental. I have to wait for a bit more here. Maybe within the macro. We'll give it 12 more minutes. Suspension block right here on the 15-second. Went into it. Rejected it. Smooth highs. Data lows. Like if it's data lows, it might actually hit these as well. So again, I'll be positioned short later on. Oh, it looks like already Chris grabbed a short. Good job, man. Like that's a short like that. It definitely makes sense. But not for this live stream. I cannot do things like that here. Unfilled RTH are great. DOL. Remind me what DOL stands for. For some reason, it's just not clicking. Day of low. Draw of low. Shuv, you got to tell me what DOL stands for. I've seen it many times. I know what it is. Brain's just not computing right now. So anyways, I'm looking at that short there from a 1 minute perspective. Do I see anything really? No, I don't. I'm not going to be risking capital on like a short like this. Like what? It's going to break this random 15-second fair value gap to the downside and just take a short like this. Not for my appetite. Very low RR, very low risk, high reward here if it does that. I'd have to wait for like something with more confirmation. But that's not, I will not be, of course, DOL, Jean liquidity. 800 has a weak imbalance. So we are above. We hit, you know what's crazy, guys? This level right here. This is the suspension block mean threshold. Actually, no, it's not. Sorry. My charts are not correct. Yeah, it is. This is the so where it stopped at was at the suspension block mean threshold. Interesting, eh? But anyways, this is all hindsight. We got there's nothing here right now for us, at least for me to share with you guys. That's somewhat of high probability with high risk reward. I'll have to wait for a bit more. Macros in 10 minutes, maybe something there, but we'll see. Yeah, brain's not braining. You know what? Brained enough today on these two shorts. I'm very satisfied with how I executed everything. It could have been a bit better. Don't get me wrong, but I think today was a success trading in the range. In really low probability conditions, I'm really happy with my executions. Guys, when things clear up on the charts, that's when we start printing crazy money. It's periods of time. There's periods of times where you just go break even a couple of sessions. There's periods of time where you just do bangers every single day. And remember, trading's like a marathon. It's like you have to be in it. If you get taken out within one day, you cannot participate on the next run. And your participation on the long term, that's where your edge plays out. It's like casinos, like 0 and 00, like they're going to rake it in. Like eventually that 4%, it creates millions of dollars, but you have to let your edge play out and you have to have enough bullets in the gun to keep going. Good thing about these prop firms is you can definitely trade them a bit more aggressively. If you have a couple or even one, you can definitely break it down into 5 trades and hit that payout a lot faster. And if you blow, just pay another $50. But if you're trading multiple, like 10 to 15, you do have to take it slow and treat it as real capital. So you like my patience? Yeah. You guys forced me. Breaking news, CPI just came lower than expected. All right, let me see here. Forex factory. So looking at CPI here. So when CPI is lower than forecast, that's bad for the currency. That's basically the correlation there. When actual is greater than forecast, that's good for currency. That's in the notes of. So Believe it or not, we got a pump to the upside with negative CPI. And this is why all of you should never use, unless if like even Trump, like yesterday, he said that he's opening up the Strait. It dropped down and then went up, right? So there's crazy manipulation before the actual pump higher, before the drop lower. So I haven't seen a correlation in positive and negative news. It's just look at when there's news and look for what it does and trade off of it. Chasing the stop out. All right, so you can see here, we got this huge fair value gap. I don't know, guys. I'm going to give it 5 more minutes. If not, I'm just going to go enjoy the rest of my morning before 9:30, and I'll start trading at 9:30 again, or maybe 9:50. Give it a couple more minutes. Second, 15 seconds. I just don't see any meaningful fair value gaps here. There was one here, I guess, right? That's the first one on the downside and the rejection. Again, like this is me talking in hindsight, which really means that when it was happening, it wasn't significant enough for me to point it out. I didn't even look at 30-second here, but technically, Monday's first presentation, drop lower. It would be nice to see these highs being taken. And then maybe I'll look for lower. That's going to be ultimately the fake out. But price might just drop from here. I don't know. Sometimes I don't know, guys. Let's do this, guys. I'm not seeing anything play out. No. We'll wait till 8:50 till the macro, and we'll see what it does then. If we don't see anything significant happening, like nice PA forming, we'll call it a day in 5 minutes, or at least a stream. I do have to make my daily profits for today anyway, so I have to stream later on. And not stream, I mean trade. The best days are when we make our profits in the morning and you just close out the entire day and you're done. But not today. Look at the daily chart. Like if you guys look at the daily chart, it's a very difficult chart to trade. We're in daily consolidation, in my opinion. So if trading was difficult over the last, I'll probably say 2 weeks, it's because we had a tough daily. Before that, we had nice daily trends and trending days, but now it's just technically sideways consolidation. And we're really trying to cherry pick little small tiny moves in the market. So come on, price, give us something. See, like the only fair value up that I have is this right here. Technically, we are displacing. So first fair value gap, we're displacing from Monday's first presentation from last week. We are above the fair value gap from the daily perspective from 2 days ago. Relative equal highs right here. This red line here, there's relative equal highs up there. So do watch out for that. And then price right here, it looks like it's just trickling low. 30-second. Yeah, I can't put risk behind this. Here is the CPI fair value gap that formed. We're above mean threshold. But I think, guys, to be honest, I just can't think of a scenario that I'll trade this. And on that note, I think we're going to close it off today. So guys, If you guys enjoyed it, feel free to drop a like. Code DOM should give you the highest discounts, and I only recommend 2 firms right now. They're there in the bottom left. And we'll be back tomorrow. Hopefully we can pull in a bit more profit than we did today. Take care, guys. Happy Tuesday. And tomorrow is going to be PPI trading. See you guys.